Hello, this is Itai Levitin, and I'm looking at Berkshire Hathaway. Uh, brk.b is the ticker. That's the one with the lower price per share, thus more accessible to retail investors, thus traded at a higher volumes in comparison to its brk.a stock ticker. And as we do in our buy the dip approach, we say we don't know if the price will get to our buy zone, but if it will, we're interested and we're going to structure a very detailed bet and trade, along, of course, with a very limited potential loss through the stop loss. So we've got this um, purple line, which is the VWAP, just at the consolidation after the earnings of October 23 and before creating, breaking out of the high of 2023. And we see also some touch points on that. So price reacted quite well to it. Okay, here, two touch points, another third one here. And I believe that later, if we start testing that purple line, then it's starting to be a spot where we can be on alert to buy. But the actual buy zone is going to be actually under that that VWAP, and corresponding to this consolidation period and its volume profile. So the buy zone is basically here. We cast a net of three buy orders. We do that because if we had a single order, we might get close to it, reverse up, and not fill. And basically, our margin of error is lower once we cast a net. So we're able to strike a balance between averaging out a good price, entry price, and not missing the trade. So we're looking at these three trades, and through the Leviton method, a bit of a twist that I invented, we're doing it in the Fibonacci series. So first one is going to be 50, and you can adjust it. This is an example only, and you can adjust it according to your needs. So it can be 100, 200, 300. Okay. So we're basically, the first buy order is at $419.57. The second one at $409.57, and the third one at 404.57, where we're buying 150. And then our weighted average entry for the full position long is at $408.74. We apply a very tight stop on that. So our 2.9% stop loss is going to be under the 400 round number at $396.88. So that's where this red line stop is. And by the way, you can also see that it's below the value area low of this consolidation area. I'm also looking at other charts when I suggest this idea at your discretion and trade at your own risk only. See this as my journal. Uh, and so I'm taking into account some other things that you're not seeing here through other analysis. And in my opinion, a stop loss at aforementioned just under $397 is appropriate. Our take profit is going to be at $456.15, but it's going to be, we're going to leave a runner. Why leave a runner? Okay, so this is the line of our take profit. Because we want our runner, for example, 20% of the position, just an example, it can be 50%, it's up to you. I suggest it's at least 20%. We want to see that it's running and hopefully riding a possible wave to that all-time high, a new all-time high, because we are talking about a pretty solid stock. And because it's not like a penny stock and not a very risky one, we can take we can let that runner go, um, seeking an all-time high, new all-time high, and we can also increase our positions. If you can see, our risk is low here. It's less than 3%. And you can also see, say or claim that our take profit is not that big, 11.6%. Some retail investors, it doesn't move the needle for them. However, I think about it in terms of the risk versus reward, which is in a very interesting 4x, which is definitely not only legit but attractive. And because we're targeting what some might think is a fairly low take profit, we can increase our position. Okay, this is up to you. But right now, our full position is about 122,000, and of course, a lot of you have leverage on that. It doesn't mean that you need 122 in your account. Some of you need a fourth or a fifth of that. Other might take this orientation, which is it is, and find the options, the call options to buy once the price, if and once it gets to our buy zone. So there's different ways to play that, but in any case, you can increase your position size because we are talking about a stable stock and because our risk is low and we're going on a take profit that is fairly low in terms of 11.6%, but that four is what you should be looking at. Okay, the 4x reward versus risk. Do trade at your own risk. In summary, I'm not saying it will get there. I'm saying if it gets there, it's interesting. This is a very detailed way of how to buy it at your consideration, and have a good time with it. Thank you, and do continue visiting us for additional original ideas. Thank you.